Hey there folks, today's video is going to be about a real tasty stock, one that quite literally tickles the belly. I'm talking about the Happy Belly Food Group. These guys are the real deal when it comes to building valuable food empires. They've done it multiple times previously, and yet this time, we can hop along for the ride and have them take us to the promised land. Happy Belly is the big cheese when it comes to consolidating emerging food brands, both CPG consumer brands and QSR restaurants. They're the ones who are bringing all the tasty treats to your plate and hopefully also to our stock portfolios. And let me tell you, these guys are not messing around. They've been demonstrating some laser-focused execution lately. They've announced over 80 new restaurant locations, and they just closed an above-market, oversubscribed financing. But you don't have to take my word for it. We've got Sean Black, the CIO of Happy Belly, here with us today. He's going to give us the inside scoop on what makes his Happy Belly Food Group so special.
Hey, well, welcome everybody to another edition of Talk Stocks podcast. Today we've got Sean Black, Chief Investment Officer of the Happy Belly Food Group. It's an emerging QSR and CPG consolidator. And without further ado, why don't we say hello? Sean, welcome. Thanks for joining us today.
Thanks, Kier. Thanks for having me. And look forward to today and what you've initiated on your new program. I think it's going to be really interesting to follow along too.
Excellent. Well, maybe you could just start off by telling us a little bit about yourself, your background. You're pretty experienced in the QSR sector, so maybe you could explain a little bit about that for those of us that don't know that sort of vernacular.
Sure. Yeah. When we started in the restaurant business, I was 14, worked in the business and then helped launch my own several brands across Canada. We've, and globally, we've had about 400 restaurants under our belt that we've participated in the openings of. We've had several exits in the space, some brands along the way. And, been on the public side as the Chief Development Officer previously of MTY Food Group out of Montreal. And now this is my second go around, as you mentioned, today in the public sector as the Chief Investment Officer of Happy Belly.
Excellent. So you mentioned you've had a couple of brand exits. Maybe you could explain what those restaurant groups were, like some of the brand names, and then also.
Sure. Yeah. Well, my partners and I started. Yeah, sure. My partners and I started a smaller brand. One of the early startup days, we started a brand called Extreme Pita. That was our first venture. From there, we launched Pure Blends, a smoothie chain that was really a clip-on to Extreme Pita. Then we launched Mucho Burrito, and we built those brands to, in the 330, 350 unit range, plus a pipeline of about 50 to 70 stores, I believe, at the time. And we sold those to MTY Food Group. That was part of that transaction. Saw me go and join MTY as the Chief Development Officer. And then, so once that was done, my tour at MTY, we launched a company called Crave It Restaurant Group. In that group, we acquired a partnership in a JV with a brand out of Toronto called Burgers Priest. We then subsequently JV'd with a brand out of Toronto that was in its also early days of growth, which was called Fresh Restaurants, plant-based full-serve restaurant chain. We built those up significantly from an EBITDA and a unit count perspective across Canada and into the United States. We exited those to our partner, which behind the scenes was Recipe and Paul Rivette from Fairfax. We sold those in Q2 of 2021. So that was our second kind of larger exit in the QSR space in Canada.
Wow, congratulations. So maybe this time around, we get to ride along a little earlier in your iteration here as you're getting going.
That's one of the big motivating factors to do this was a lot of our franchisees, as we built the network, a lot of our partners or area developers globally used to always say, hey, you know what, let me buy part of the company, or let me, how can I participate in the equity of the parent company? And we were always private, so that was never an opportunity. Well, I think as you'll see over time, as we build this one, some early franchisees, some early area developers, some early family members are going to be all very supportive long-term shareholders. That's the goal. That's what we're after, and hopefully we provide an opportunity for everyone to make some money.
Excellent. Well, I've heard you mention a couple of times, we've spoken before, and also in a couple of other interviews, a term called putting the band back together again. A few of you have already worked together before. Maybe you could explain a bit about who they are and kind of how you worked together and what they're each sort of bringing to the table here for Happy Belly.
Sure. Well, if you look at, we started it right from day one, actually, right? How we shaped the board. Brought on two of my business partners, long time, 25-year business partners, Alex and Mark Kiki. Both have, in very different strengths and discipline, but equal experience in the space, and been along with me for the journey. As part of, we were all a team. So they joined the board. Mark's a CA, CFA, great mind when it comes to legal, accounting, operations. Mark could wear a hat of a CFO, COO, and a lot of companies it could be a CEO. So he has his own strength. Alex, when it comes to team and culture and culinary, construction, overview, branding, everything guest facing. Alex is tough to compete with. He's really strong at that. So those two guys joined the board. We had a third member, Kevin Cole, has been in the CPG business for as long as I've ever known him, from brands like Ferrero Rocher and the Mars family. Built one of the brands from nothing to $1 billion business. So very, very strong in CPG, which rounded out an element that we were missing. We had some exposure to CPG, but not to the depth and experience that Kevin. So first thing we did was rebuild the board. Then we started and rebuilt each of the divisions. So on the below us, working with us, we reshaped our sales team on the CPG side, our operations team on the CPG side. Then we went in and we reshaped the operations team on the QSR side. Brought on someone from Nando's and from Starbucks. Brought on a training and operations and marketing team that we've had experience with. And now recently you'll see in the news, as we start to expand, we went back to our former network. So in our network, we have area developers, franchisees, construction, all the departments. So first deal we've announced was a area development deal here in Ontario for one of the brands. We announced 20 units with our plant-based brand. And then we've subsequently announced another 30-unit deal for Power. So that's a former area developer that we worked with. He has experience with Recipe. He was a franchisee with Montana's and Kelsey's. And then previously, he was an area developer for us in the East GTA. So he developed Extreme Pita and Mucho Burrito. He's opened dozens of restaurants with us. So when we talk about putting the band back together from top to bottom, that's exactly what we're doing with the company.
Excellent. So what sets Happy Belly apart from other companies that might be in the QSR category? What's your sort of angle? Where's the open ice for you as a company?
The two sectors that we've been focused on is QSR and CPG. And the number one thing where the name comes from with Happy Belly, it stems from, part of the 3 Ps for us. And that all stands for the belly check. So literally when we're looking at a concept and we hear about it, we talk to the people, first thing we do is go try the food. If the food's great and, the people have passed the test, then we start to dig in on the process. And the process for us is very similar, whether we're working on a CPG product or a QSR product. We do our deep dive on the brands, the food. If we like it, then we lean in and we start to, leverage our platform that we're developing to help them accelerate growth. And that's really what Happy Belly is about. We're built and continuing to build to be a leader in the emerging brand sector in Canada. And we will do as a consolidator.
Excellent. Well, sounds like even with just some recent success here and being able to monetize and exit a brand or a couple of brands here, even just back in 2021, seems that you probably have a pretty good finger on the pulse in terms of how you identify and select emerging trends and brands. Can you walk us through a little bit about how you do that and maybe, what you think is sort of going to be the places to be?
Absolutely. We definitely, we call it open ice in our 4 walls. We're looking for the open ice. We're not looking. When we look at where we launched Mucho Burrito, that category was virtually untapped. People when we opened it were like, "Is this like a Taco Bell?" Or in the Western Canada, they'd ask if we were like Taco Time. So really that was an emerging sector. We watched a trend that developed out of the United States. Some of it was in the UK as well, but typically United States, you would find a ton of great fast casual Mexican. There wasn't a presence in Canada. So we saw an opportunity to be an early, mover, which is very important to us, early mover advantage. So we moved in on the category, launched Mucho Burrito, and scaled it very quickly. And today that brand's about 150 units across Canada. And in my opinion, the most successful fast casual restaurant in the Mexican chain that's ever been launched in Canada. So that was our first opportunity. It's being on the ground, identifying it. We saw the same thing with Fresh. We didn't see a recognized brand that was serving plant-based full serve across Canada that I knew of. I couldn't name it. Name 5. If someone says to you, couldn't do it. So that's where we saw the opportunity. People look at, healthy people's eating habits were changing. We saw that opportunity and we moved on it. And if you look at what we're doing for Happy Belly, it's the exact same thing. I've been on the road for days and weeks now, almost every single day in restaurants, talking to people, looking to see where the open ice is. Not only identifying a category that we can get in and deliver organic growth in, but something that has years and years of growth in front of it. That's what we're after. Doesn't matter whether it's CPG or QSR. The food's got to be, and the open ice has got to be significant.
So you're sort of looking to stay away from sort of like fads. You're looking for more long-term trends where you can scale them.
Yeah, or something that is long on the tooth as far as it's been around for a long time, and you look at the numbers, and if the unit economic model suggests that hey, this the brand's been tailoring off. It saw a huge spike in sales, but now it's just leaking customers or bleeding sales over the years. We're moving on. That's not where we're going. We're looking for something that we can find ideally within 5 to 20 units. We will look at some bigger deals, some a little bit smaller, but 5 to 20 units is our sweet spot that we believe we can take and build it to. Ideally, I'd like to double the EBITDA in the first 24 months. If we can double the EBITDA, double the scale, turn that 5, 10 unit brand into 100, it's a very unique position to be in, because this time around we're the built-in buyer. Last time, when we built them to a certain size, we then exited them, we sold them to someone else. Well, now the difference here is Happy Belly is the built-in buyer.
Excellent. So just to sort of dovetail on that, you guys have been very busy here announcing deal after deal in terms of joint venture and sort of acquisitions of I guess some of these emerging QSR brands where they have anywhere from a couple to 5 or 10 locations. Can you just sort of walk us through the process of acquiring and integrating a new brand into Happy Belly, and can you touch on maybe a little bit in terms of which brands you've got, and then how aggressive you think you want to be in terms of growth?
Sure. Yeah. I'll give an example. Yesterday, we went through an onboarding program for Pyro, a brand we recently announced that we had signed our definitive deal with and closed. So that brand is, some brand I love. It's a category that's massive in the United States. One of its direct competitors in the United States is, going to go out shortly here. It looks like north of $2 billion IPO called Kava Grill. But for us, this is
and Pyro is in what the
Greek fast casual Greek is the category we're after, which we believe is wide open in Canada. We're putting our stake in the ground, our hat in the ring, and saying we believe we're going to develop Canada's leading fast casual Greek concept. And so far, no one's been able to argue with us that we can't do it. So or prove that we can't do it. We had yesterday with George and his team, the founder. First thing we did with Alex and the group is we sat down and had an onboarding program. So we had George and his team, our side of our team, going through our full list, and the piece that Alex loves is the playbook, and goes through it and labels out everybody's roles, responsibilities, timelines, who's going to accomplish what over the next 30, 60, 90, 365 days. Really, we start to map it out and put a calendar in place and build that brand and scale it. So we've already announced with that brand very quickly a deal in Ontario for 30 units. And, our intention is to go asset light franchise model with that brand and look for other area developers as we put our band back together. I'm driving some of our old former partners, crazy, and there's some of them are driving me crazy with looking for opportunities. And so now we're exploring, the best in class and looking across Canada to see who we want to partner with and who we want to launch into other markets with. But then that is the next step. So first onboard the brands as we do a deal like Pyro, then map out the growth. And as we start to solidify that growth and start to put pen to paper, then we'll build the support network to help accelerate that across Canada. So for Pyro, that's in motion. One of the other recent brands we've acquired that's on the franchise platform, Let Us Love, which is a QSR plant-based, that is in motion as well. We signed a 20-unit deal here in Ontario. So that one will actively be growing, and I'm visiting sites daily, meeting with landlords, looking at opportunities. Spent yesterday evening on multiple calls and moving brand Pyro, George and I as well. So Pyro's one. The third brand that's already growing in QSR, which is on a corporate model, is Heal Wellness, a smoothie bowl and smoothie concept out of Hamilton. We've now got that unit up to 4 units, double the size already, and we're going to continue to accelerate that through 2023 and 2024.
Excellent. And so just in terms of some of the expansion plans, so in terms of Pyro, how many stores does Pyro currently have?
Pyro has 4 open, and we've just done the first development deal for 30 more units in Ontario. And we actively have our foot on the gas, looking to accelerate that across Canada imminently.
And then Let Us Love, you've got a development deal for another 20, and they've got how many operational today?
The one operational in Burlington, very successful operation, and which we acquired and closed on in Q3. And we've now identified that as a growth model. So that'll be something that we can replicate, and we're actively negotiating on real estate as we speak.
So just with those 2 alone, if you execute on the expansion you've talked about over the next couple of years here, it's upwards of another 50 locations. That's
right, just on those 2 alone, and ideally we'd like to be exiting somewhere this year with between 100 and 200 units in development. If we had our way, that would be where we'd be. And if you look at where these brands perform and how Mucho Burrito performed as an example previously, that would create a significant amount of value for Happy Belly. And every deal we look at, we're looking to make sure we're creating value. And and it doesn't always have to be overnight. My person could care less about where the share price is today from a standpoint of I'm not panicking today. I'm really sincerely our team's openly buying in the float. We're actively bringing in family, friends, business people, friends and partners in business that are actively acquiring shares. So we believe that we're here for the long term. We are well funded. We've got a great support network, and every one of these deals we do has a contractual agreement attached to it. So somebody, when it does an area development agreement, it commits to 30 units. Over the next 10 years, they are contractually obligated to open those stores. So as we look at those, that's going to be consistent growth for the next 10 years in what we almost like a SaaS model, but our royalty model will build for the next 10 years straight on every one of these deals we do. So I realize they take time, but every one of them has a significant contractual value when we sign them.
Excellent. Good point to bring up. I was sort of wondering what sort of time frame it would take to set, for an area to be developed. So thanks for answering that. Are you kind of going to be continuing on in terms of doing deals for acquisitions of emerging brands, or are you pretty happy with your brand set and it's now about going out and expanding what you've already got?
The very real answer to that is we have an appetite to accelerate in our M&A in front of us today. Anytime we see a deal that fits in our box, right? It's in our area, and if it checks all those boxes, people, product, and process, and when we look at that unit economic model and it's delivering on the numbers, then there's always room. I always say it doesn't matter whether it's shoes, cars, or brands. There's always room for one more if you find a great one. And we have the team to do it. So why wouldn't we deploy more? I've never seen the market as active as it is today. The amount of inbound deals that are, just cold calling us and coming out of the blue for M&A is more than I've ever seen, and that's from the United States to Canada to international. We've been literally vetting deals on a daily basis. So not all of them check the boxes for us, but will we actively do them? Yes. And honestly, if there's one other category there's one in particular that I love, if we can't find the right partner that'll do the right deal with us, one thing that's unique about our team is we'll just do it ourselves. You know what I mean? Like, we have the expertise in-house. So we're not going to be ever held ransom by anybody saying, no, my brand's worth, an astronomical number. And honestly, if somebody wants to hold on to it that tight and thinks it's worth that much, I'm probably equally motivated to go do it myself even more. Because, if I look at a brand and somebody tells me and they really believe it's worth $10, $20 million, well, if we can make a $500,000 to $1 million investment and overnight create potentially $10, $20 million of value for Happy Belly, a little more work, a little more time, but we're not opposed to doing our own startup. We have the team and the skill set in-house, and we have the access to capital. So we will actively do deals with good partners, good people we want to partner with. But if there's ever a category, which there are a couple that I believe I'm yet to identify, I believe they're going to be some of the biggest open ice over the next 5 years in Canada that we've ever seen, potentially bigger than Mucho Burrito. And if I can't get the right deal done, we'll do our own.
Excellent. So do you think that kind of the area you're playing in QSR, I guess it's, the better for you. It's not going to be the least expensive sort of junk food that maybe is contributing to our sort of poor health. What area do you think is sort of the best place to be in? Is that exactly where you're focused?
Yeah, you know what? If you look at Pyro is definitely a better for you category, right? It's more on the healthful side of Greek and Mediterranean food. So that is an area we prefer, but I tell you, whenever it comes in to a category, we're looking for best in class, so if in most of the categories, number one or number two player in that category, they consume about 60% of the business. So you don't really want to be in that lower tier, because everyone else fights for the remaining 40%. So when we did Burgers Priest, I can, make an argument with anybody that it was the best burger in Canada. The unit economics were numbers that I've never seen before when we first found it. Fresh, same thing. Best full service plant-based restaurant in Canada. The unit numbers, supported it. So Pyro, incredible numbers on a per unit basis. So when we get that, that's what we're actively pursuing is, the numbers, right? So the numbers justify it if the customers want it. So I'm not opposed to, brands that sell different things or, but it's got to be unique. It's got to be well positioned. And we do lean towards the healthful side, but we're not pigeonholed into anything. We're not, we certainly are a bit agnostic when it comes to food.
What sort of news flow catalyst can investors and shareholders look forward to?
I often refer to a couple of lines you brought up, one of them about putting the band back together, which we are doing, and that's going to continue. You're going to see us, I believe, continue to deliver significant organic and inorganic growth throughout 2023. I think we're at 4 or 5 quarters now of quarter-over-quarter growth. I think we've had 2 record quarters in a row. We are scratching, clawing, fighting every day, 7 days a week. Probably 18 hours a day. The team is fighting to, continue that trend. And so can we guarantee we'll always hit it? No. But do we want to work on top line and bottom line for the company? Yes. If you look at us in 2022, we did 4 M&A deals. Ideally, would we like to this year continue that pattern of probably 1 M&A deal a quarter? Yes, we would. So do I think we can scale that up to 4 to 6 M&A deals this year? Yes, I do. And if we layer that on to significant organic growth, as you start to see each one of these brands come through that onboarding process and then start to accelerate growth, I think as we head into 23, 24, that's where we'd like to get into that 100, 200 stores and development, build the team to support that growth. And, that platform could be, 4 brands or 6 brands and continue to accelerate. And the numbers and the team, the biggest thing we need is the people to do that. And we're very fortunate so far. As long as we can continue to, attract the talent and the right people to accelerate the growth, we'll continue to do it. But M&A and organic growth are the 2 number 1 things you expect to see from us throughout 2023.
Excellent. So I can't give you all softballs here. I got to ask you a couple of hard ones.
Ask them all.
So you've sort of hung out of financing sort of since late February, sort of going on a bit more than a month here. It seems like it still needs to close, if I'm not mistaken. Just wondering what the strategy was there. Why sort of hang it out? Not just sort of close it quickly. Your stock's down a bit, 15 or 20% since you announced it. Are things still on track to close this?
Yeah, they are. And if you look just the other day, like I was in the market, I was actively buying. Mark, one of the gentlemen on the board, he was in the market buying. So we'll continue to actively buy it. But the number 1 reason for the delay, the gentleman that's doing the funding for us, very strategic investor involved in the company, he was on vacation in Turks and Caicos. So I think it was Turks or Aruba, but he's been away for an extended period. So he sort of dictated the timing. He said, "I'll deal with it when I come back, and I'll forward me the paperwork, and I'll get it done." So, do I intend on? We have full expectations that in the next week, 2 weeks, we'll close the financing. We will move forward and accelerate growth. Do we need this financing to execute on anything in front of us today? No. But you ask for the reason for it. Anytime you can take in strategic capital, I tell any CEO or CFO or CIO in the market today, you never know what's going to happen. So always when fair terms are presented to you from a strategic, take the money. Bring it in, accelerate, deliver him a return on that investment. But also, in that piece, I think you're going to see insiders participate. I think you're going to see more support and participation within the company. As we have no issues with, at this point in time, funding ourselves somewhat as well, just like we did previously. If you look, when we joined the company, we all funded the company, including myself, at 20 cents. There's never been shares issued in the public float under 20 cents. So, the gentleman coming in and financing us, participate in this financing, because it was, for the initial part, it was 1 single check writer for the initial draw. That was, at 30 cents, right? So if you think about where we're at 15 cents, I wasn't buying yesterday, for last week at 15.5 because I had money to burn.
Right. Well, that's good. And I've definitely seen you guys have a very active sort of steady report here, managing and insiders. It looks like basically your whole band's been kind of constant accumulators in the market, which is something we love to see. I imagine with some of the deals you've had going on, there's definitely been some periods where you've been under blackout. Do you continue on sort of accumulating more out of the market, or will you be doing that?
We would like to continue to accumulate a lot more in the float. We have some people I know, including my own personal broker and some other guys that are out there. They certainly see us filing CDI reports, like you said, and they continue to accumulate. So we've got a pretty active group that's been wisely accumulating. But also, if you look back how we did this deal, like for ourselves, we didn't issue ourselves any free stock options. We didn't issue ourselves any penny shares, nothing. The only way our board and our management team were very aligned with shareholders. We only earn the options, stock options with performance warrants, they're called, at 20 cents, 50 cents, 75 cents, $1, $1.50, $2. So as we work our way up to $2, I believe it's about 27 million performance warrants we would purchase. We'd have the right to purchase at 20 cents, but we have to achieve those milestones all the way to $2 and that's
those are share price milestones.
Share price milestones. So if we deliver value for the shareholders, then we have the right to buy more shares in the company. But we don't.
And if you were to exercise all of those, it puts another $5 million or so dollars.
We put another $5 million. My partners and I would have to put into the company to support the growth going forward. So again, those aren't issued for free. We have to be check writers to earn them, and we had to be here, including the guys on the board that are all working for free. we had to be here to earn the right to those shares. So we didn't get them for free, and
Right.
that is the number one name of the game out there. A lot of guys prefer to just issue themselves free shares, massive salaries, and then just keep going back and tapping the market and doing terrible financing. So we're trying hard to finance and be smart about it. We made it a mandate and from the start. We're going to build this thing. We'll do everything in our power to build it, and not issue our shares, self any free stock. The only stock that I own today, I've earned or I've bought the float myself.
Well, that's excellent. That's very unique alignment, something we don't see very often, but great. Certainly don't mind ever, allowing, management to be able to put more money into the treasury after they're sort of achieving sort of milestones which are, market cap and share price related. So fantastic.
Yeah, at this size of the company, another $5 million plus of dollars from management in. I think it definitely shows commitment to build shareholder value, and for ourselves. I'm not doing it just for shareholders. Like I'm here to make money for myself as well.
Right. Well, that probably puts you in the top 1 or 2% of opportunities here in terms of how much capital you'd be putting in. So that's fantastic. Maybe you could just speak. You kind of mentioned earlier Cava. Are there any other direct sort of comparables?
If you look back when we started Mucho Burrito, Chipotle was under 100 stores, and we called them, bugged them, would you come to Canada? Would you come to Canada? And honestly, they had a hard time, I think, for the most part, finding Canada on a map. They were in Denver and had no interest to come to Canada. They were like, geez, we're just getting started down here, like, get lost. Called Qdoba, called several guys in the United States, no interest. So we created our own. Well, if you look at Cava, they're about 250 units today. Their last financing in 2021, I think, was done at about 1.7 billion, 1.7 billion USD. And then with the pending IPO in the north of 2 billion range, let's say since then, they're the category leader at about 250 units. Fast casual Greek. I'm going to say they're, I say skew more even on the Mediterranean side, but they are the Chipotle of Mediterranean. So we saw the opportunity, believed what they were doing was, early on in the game. We took first mover advantage to ourselves and said, you know what, we're going to do, our own version of that, but, look to build, quickly, get out to 50 or 100 units in Canada before, Cava comes up to Canada or even considers it. And Cava's today, I believe, mostly all corporate stores. We're going to have some corporate, some franchised. So we'll probably have a blended model, but fast casual, it is. If people in Canada that are watching will know Chipotle or they'll know Mucho Burrito, and if you were to take Mucho Burrito and swap out the food and insert Greek, a healthful Greek menu, that's what you have. If I could put it into real layman's terms, and we believe that model of fast casual is the future. It's already today, but as well it's got significant growth coming forward. And I believe Greek is the, number one, number two open category for the food in Canada. And the second category, I can tell you, we're actively trying to get into it. So we'd like those to be two of our lead horses in fast casual growth in Canada.
Well, fantastic. Seems like it's a red hot sector. Let's all wish Cava some good luck here with their.
I'm the first one to cheer them on. I'm happy for them. They definitely are demonstrating a value at 250 restaurants, or even 300 restaurants. That if they can fetch $2 billion valuation USD, I think us at 15 or $20 million, considering the what we call the sum of the parts that we're assembling. I think over time we'll be able to grow them and realize real value for shareholders. But time will tell. We're here putting our money where our mouth is and trying to do the best for everybody, including ourselves.
Excellent. So just before we wrap up, is there anything else you want to cover?
No, I just think, like I said, hopefully we can do our best job to be predictable growth. Like year over year going forward, we'd like to build an investor base that. Not all, I understand some liquidity and some day trading and all that does happen, but that's not my game, and it's not what we want to play. We want to build the base, have really strong people, and create wealth. Like if you look back, one thing that people don't always realize is MTY started off at 20 cents a share. I spoke to one of the earliest shareholders recently, and who's become a shareholder in Happy Belly, and 20 cents a share is where they went out. And they've recently had a record high of over $70 a share. It didn't happen overnight, but they are up about 13,000% since inception. And if you look at that, other than the dip that they experienced when COVID first happened in early 2020, they've had nothing but growth for years and years and years. And if people have to ask, well, where'd your model, where'd the idea come from? Well, don't look too far, back in my history to understand that I really respected what they did from a consolidator model. I really respected what Recipe did, because Recipe was one of the best restaurant operators and executors in Canada from a multi-branded platform. MTY, I would say their strength was M&A and being aggressive and just charging forward. So we're trying to take the best of both worlds, who happen to be both transacted with in the past. We both were either partners with Recipe, which or we helped run MTY. Take those two things, best of both those worlds, come up with a company that could do really strong, disciplined, and I say the disciplined, I'm going to say it 10 times on M&A, because we won't go inside that. You're not going to see us do dangerous or stupid deals. We're going to play within our lane. We're going to do that M&A Recipe, that MTY did, and we're going to focus on operating results and deliver the key metrics, the KPIs that that Recipe did. They were really focused on operations and operating that. So if we can combine that, that's the secret sauce. That's how we can deliver real organic growth with every asset, and so operate them well, but also buy them well, and buy the brands that we believe over the next 2 to 5 years can deliver significant growth. If that's all we do, I'm very confident that us as the team will earn more of those performance warrants that are above 20 cents.
Yeah, excellent. Well, for you to fully exercise those, we're looking at more than a 10-bagger from here. So
yeah, that's what we're here for. When people ask me, why are you doing this, Black? Why'd you get back in it? Why didn't you park your ass on a beach and retire? And my honest answer is, I love the business. I love building things, and check out the performance warrants. If you do the math, there's a really simple path here for myself to make another $10, $20 million. And that's why I'm here. Does it mean it's guaranteed? No. You know what I mean? But do you mean we're going to bust our ass trying to do it? Yeah, it does.
Well, I guess who needs the beach when you can be in restaurants all day, right?
And yes. And I've been in a lot of them lately, and there's some great ones out there. And I've been trying a lot of burgers lately. I've been trying Greek. I've been trying every category that's out there. And we're going to continue to find the emerging sectors and try to be the early mover in it and be a category leader. So stay tuned and see if we can do it. I believe we will.
Hey, excellent. Thank you so much for your time. Let's sort of check in and provide an update here after we see a bit of execution. But thanks very much. Appreciate it.
Yeah, absolutely. When you see the next numbers come out or the next deals, and you want to throw me some fastballs or some hard balls, feel free.
All right. Sounds good. Have a good one. Thanks, Sean.